Hey, what's going on, guys? Welcome back to the channel. It's Henry Moldovsky, and today we're going to talk about making consistent income, how to actually be successful as an option trader. And honestly, all I'm trying to prove in this video is that options are safer than stocks. I'm going to flat out say that. Every YouTuber that you're watching that's telling you buy this stock, buy that stock, well, I pretty much have seen the results. I've been on this YouTube game for about 2 years, and I've been trading options for 9 years, okay? So I'm going to just show you for yourself with proof that you should be trading options and how you should be doing, okay? Now, today is a pretty typical day. The market is pretty flat. It's pretty volatile. S&P 500 is down 38 basis points, okay? You see that right here, negative 0.38, while my portfolio is up 0.12. So I'm actually beating the market by 50 basis points, or about 0.5%. Okay, it's not a lot of money, but it actually just proves to you how the market's down, market's volatile, yet my portfolio has done absolutely nothing and has shown no volatility on over $2 million. I'm up $2,400. Now, it's not a lot, right? It's not that much money, but if you think about it, everyone else is down, everyone's dealing with a lot of volatility, and I don't have those problems. I'm A, not losing money, and B, my portfolio is not very volatile. While I will say I'm actually using margin, okay? So my portfolio is on margin. I'm actually investing with $3 million. I'm borrowing $1 million. It just doesn't say that on Robinhood, but I have a lot of option positions open that are worth about $1 million extra in margin collateral. So basically, I'm investing $3 million. I should be down. My portfolio should be going crazy, yet it's not, which is interesting, and that's what I plan on talking about today. I plan to go over every single position that I have open right now, which, by the way, 77% of them I am winning. So I have a 77% win rate, pretty much on average nowadays because the market's a lot more volatile. Back in 2021, my win rate was like 92, 93%. It was insane. I was winning every single trade. But hey, you know, this year it's a lot more volatile and I'm only winning 77% of the time. But you know what? That's a whole lot better than most people. And if you think about it, trading is just a game of like 50-50. It's completely random. It's a very difficult game to play. So me winning 77% of the time, I virtually guarantee no one else is doing that. Maybe they say they are, but they're not going to show you like I am. They're not going to open up their history and actually show you every single position. So with that being said, let's go over some of my positions. So I love tech stocks, and that's because when I was working on Wall Street, I was actually a tech analyst. I was focused on software, and I really enjoyed the technology space because since these stocks have so much volatility, they have a lot of implied volatility, and they're also harder to value. And anything that's harder in life has more opportunity, right? That's why Coca-Cola doesn't have that much opportunity, because it has very stable cash flows. Now, don't get me wrong, I love Coca-Cola. I think value investing is the way to go. In my college education, having a finance degree, every single textbook, every single professor talks about value investing being number one. Now, I like value investing, but I put my own twist to it because I've been doing this for so long. I've seen what works, okay? I pretty much find value within the growth space, okay? So for me, that's Apple. I'm selling puts on Apple. Airbnb, I don't like Airbnb. I've had some bad experiences with Airbnb. I don't think they are as competitive as they used to be. And I think the hotel industry is actually a lot better of a bargain than Airbnb. So I am short on Airbnb, and we're making money as a community on Discord with Airbnb. Now, all of these trades, by the way, I'm always posting on Discord so my students can just follow along and they can print cash with me. But I'm also teaching them why I do certain things, and I'm doing that on my Monday and Wednesday calls. You can always check that out in the description. Now, a stock that I recently just opened up, in fact, I'm pretty sure I just opened this up on Monday. I'm already up 93%, is Asana. And that's basically because I was looking at Asana from a fundamental perspective. So what I'm always doing, guys, to be consistent, is I'm not just picking a stock that I see on the news. That's actually the opposite of what you want to do. You don't want to pick the stocks that are on the news, okay? If you want to grow your portfolio, whether you have a small portfolio, a medium portfolio, a large portfolio, it really doesn't matter. You need to stick to some rules. Some rules that are actually successful, okay? And those rules are, A, don't follow the news, okay? B, pick stocks based on fundamentals, okay? So I was looking at the fundamentals of Asana. I really liked it, although they do have a lot of debt on their balance sheet. I did see a lot of good because their price to sales ratio isn't that high, and they're actually growing very fast. So I ended up selling some puts, very small account trade here. You could just do one position here for $1,300, but I decided to do 5 positions and I'm up $70, okay? The next position that I have is going to be Coinbase. So On Coinbase, I decided to do a call credit spread, and that's because I've been a bear on crypto since the very beginning. I have never really liked crypto. Now, I know that's really controversial. I know a lot of people get upset at me when I say that, but look, I went to college. My professors always taught me to look at cash flow. So whenever I analyze stocks, I look at cash flow, I look at ratios, I look at debt, I look at numbers. I'm really good at math and I've taken a lot of math classes. I understand finance. That's what my degree is in, okay? When I look at crypto, I have no idea what it's worth. It's literally like gold. It has no cash flow. It's only worth what someone else is going to pay for it. It's a very difficult game to understand what is the value of Bitcoin. Everyone was telling me to buy at 60,000. They were saying I was stupid. And I was saying, look, I don't necessarily say that it's not going to go higher from 60,000. I just told everyone, I don't understand this. And because I don't understand this, I'm not going to invest in something that I don't understand. The only thing that I do understand is there's a lot of scams out there. And because FTX is crashing and going bankrupt, and so is BlockFi, I looked at Coinbase and I really can't see this company doing well either. And that's why I'm selling call credit spreads. And I've been doing that really consistently. As I scroll down into more of my positions, you'll see that I have more coin positions open. I'm pretty sure I do. I've been selling call credit spreads very consistently on Coinbase, and I've been making really good money off of it. Next one is CRM. So this one was actually suggested in my Discord because a student was telling me that they have earnings. We took a look at it and we all decided on my coaching call to sell some put credit spreads. It actually ended up being a really good idea. So very proud of this trade. Awesome trade. Now another call on Google. Oops, I clicked into it. But what I'm doing right now is I'm doing covered calls. So up $60, not a big deal. This is actually a larger position, so that's not very small account friendly. A lot of trading that I do is small account friendly, like this one right here. It's basically a put credit spread on Google, up $33. I have Palantir. So, the interesting thing is a lot of people are telling me like, hey, you were pumping Palantir and Palantir didn't do so well and you lost money on Palantir. The truth of the matter is I actually did not lose money on Palantir. I've been holding Palantir for a very long time and I've been trading it for a long time. And collectively, all of the options that I've traded on Palantir, I'm actually up on Palantir as a whole. Sure, I've lost some money on the stock, but I've done so many covered calls that have generated me money. I've also done a lot of sell puts that have generated me money. So in total, all of the trades that I've actually made and posted in my Discord, which I keep track of, I'm actually up on Palantir. So that's actually pretty crazy because Palantir is very volatile and it has lost money for people that are just holding the stock, which again is why I say you have to use options, because with options, you can hedge out a lot of risk. A lot of risk that you have in the market, if it falls, options help you cushion that risk. They literally create a margin of safety. That's literally what they're meant to do. Options are meant to protect your portfolio and hedge your portfolio. And that's exactly what I use options for. I don't use options to gamble with it. I don't use options to do anything crazy or swing for the fences. What I use options for is consistent income, for safe income, to grow my wealth. It's all about consistency for me. I have no interest in having my portfolio swing up 200K and then down 150K. I don't have interest for that. I'm just trying to live a stable life. I don't want to work a 9-to-5 job. I just want to do what I love every single day when I want to, okay? And that's completely online. So for me, that's option trading, and I can't afford to lose this money, just like you guys can't afford to lose your money. Whether you have a small portfolio or a big one, you work super hard for your money. And what you should be doing is growing it consistently. You shouldn't be watching other channels that pick these crazy penny cap stocks, or they recommend crazy picks and this is going to go to the moon and that's going to go to the moon. Like, come on now. You want to be consistent. You actually want to make money? Then focus on one thing. Follow one person that you actually believe in. Okay? And then stick to that. Stick to one plan. Stop switching plans. When you switch plans, you're all over the place. That's when you don't get results. Okay? Stick to one plan. Like, I never, alter my plan. I know it works and I stick to it. And when it doesn't work, I still stick to it. And then it starts working eventually, even when it doesn't work. Okay? Because no plan is going to work all the time. It's just not possible. There is no strategy out there that's going to win 100% of the time, right? Nothing is guaranteed. No trading, nothing in life is guaranteed. But if you can increase your chance of success, like right here, as I go through all these positions, you can literally count them. I have, a whole bunch of positions and I'm up 77 times out of, 100 trades that I make. So 77% of the time I win. And total right now, I'm up about $15,600 on all of these positions. And I'm not even putting my entire portfolio into options. A lot of my portfolio is just SPY because I just don't have enough time between coaching, creating these videos, and trading. I love trading, but I don't want to stare at the screen all day. I just trade like 3 to 5 hours a week. That's it. It gets me results and I'm happy with it. As you can see here, I'm selling some put options on Tesla. I've been avoiding Tesla for a long time. I made a video how I basically was very bearish on it, around $220 per share. And again, I got a lot of heat for that. And it's really hard to make these videos, guys. You know, I really appreciate when you hit that like button, but I also get a lot of heat in the comment sections. Like, Henry, you're not doing the right thing. You're a bear on Tesla. You're crazy, Henry. Unsubscribe, unsubscribe. And it's like, I'm just saying my opinion. I'm just trying to make money here. You know, actually tell you objectively what I think rather than sugarcoat things and just always be bullish. Like, oh, it's going to go to the moon. I'm actually trying to give you guys the truth here, what I actually feel and think, because I don't really do this for the money. I like money, but I do this because I actually want to educate people. It's my mission. It's what I feel passionate about. So for me, I've avoided Tesla since like $220 per share. And actually, let me just scroll down. You'll see like I have so many call credit spreads. Call credit spread on Tesla. This one's actually at a slight loss, but I have more, a lot more. Where are they at? So there they are. 287, 500. I have an iron condor that made 190, 550, 40. So I have a lot of call credit spreads on Tesla. Actually, also had some that expired last Friday, so they were also up a few $100s. But essentially, I am kind of bearish on Tesla, but I'm not a super bear that I'm going to buy puts. I'm just kind of bearish, and I'm selling call credit spreads. And basically, with these call credit spreads, I'm collecting pretty good income, and I'm also doing that with iron condors. So again, I have some videos on this. You should definitely check out my small account playlist if you want to learn more about trading. Like these small account strategies, they're phenomenal for scaling a small portfolio. Even if you just have like $3,000 or $5,000, that's enough to get started trading. That's enough to start making income. And you know, other strategies that I use is like Starbucks. I love leaps on Starbucks. I don't have leaps right now in my portfolio because I am already on margin. I'm already kind of leveraged. So I don't want to use leaps because I don't want to increase my leverage and margin because that's not good risk management practice. But if you just have stocks and you're scared to do some of these option strategies, then buying leaps is one of the easiest things. It's very simple to wrap your head around. It's basically just controlling 100 shares of a stock. You're long a stock essentially, but it's through a call option. It's way cheaper. Honestly, maybe I would even buy Tesla leaps because Tesla has sold off a lot. Maybe it's finally becoming cheap. And then I have a position on Oli that I'm not doing too well on, just being fully transparent. But for me, I have Oli because it's a small part of my portfolio. I looked at the fundamentals. They make a lot of sense to me. I think a lot of people use their product. So for me, it's a very small position. Am I losing money on it? I am, but I'm not really losing that much money in comparison to how much I hold. A lot of my money is actually in just SPY, Apple, Amazon, Google, American Airlines. Like I just hold the really big stable companies right now. That's because I kind of saw back in January that this year was going to be really tough because, you know, we were up a lot, but then when we started getting like volatility in February and March, I was like, you know what? I should be in SPY. I should be protecting my wealth. I shouldn't be 100% on Tesla. I shouldn't be like a fanboy. You know, I am a fanboy at time because, you know, it's a great company, but it doesn't mean it's smart to put all of your eggs in one basket. You never want to do that. It's completely ridiculous to put all of your money into one stock. That's awful risk management. You want to have your money spread around. You want to have it spread around into different stocks. That way, if one stock goes down, your other stock goes up. Or you basically want to be in spreads. Like, let's say you have some put credit spreads on Tesla and then some call credit spreads on NEO. That's cool because basically those two things are opposites. A put credit spread bets on the stock not falling, and a call credit spread bets on the stock not rising. And when you do those two strategies that are opposite of each other on the same sector, for example, like NEO and Tesla, then that's smart because both of them cannot happen. Only one of those situations is going to happen. Or you can just simply sell puts on tech stocks like me. Like, look, Asana, I just opened this up. If I look at my history, I'm pretty sure that I opened it up on Monday. So November 28th, today is December 1st. So just 3 days ago, made $75, up 93% on this position. And this was really not a hard play. This is something that I repeat literally all the time during earnings. And I've repeated this over and over again on so many trades. And look, the stock went down. The stock went down so much. And I'm still not down on my position. Look, the stock crashed, but because I'm such a safe trader, the way I trade and the way I pick Delta didn't matter to me. I had a feeling the stock was going to crash. That's why I sold the 13 put, because it's so far out of the money that even if it did crash, I didn't think it was going to crash this far down, and it didn't. And that's why, you know, selling out of the money options is so successful. Even during earnings, like check it out, this stock literally fell 12%. Okay, a stock investor lost 12%. I literally made money even though the stock crashed down, okay? So, that's me selling puts is very conservative. Now, sometimes I'm not as conservative, okay? I knew that Airbnb was going to fall. Basically, I looked at Amazon, I looked at Meta, and I saw that they fell. I had a really good feeling that Airbnb is next in the tech space. So, I wasn't 100%, but I was very confident, like 95% confident. So what I did was, let me show you this. I'd rather show you than tell you. So what I did was, on October 31st, which was my birthday, I bought a put debit spread on Airbnb, basically saying that I think the stock is going to fall during earnings. And I put 1,200 bucks in. This was a live trade in Discord. I didn't show this on YouTube because, I can't show everything on YouTube. Some things are just meant for my students because not everyone's going to understand what I'm doing on YouTube. And also, my students I care about them. I want to make sure that they succeed. So I had a very certain trade and I posted into Discord and I said, guys, I'm very certain here. I have a very high confidence that I'm not an option buyer, I'm an option seller, but I'm very, very positive that Airbnb is going to fall and I'm going to put 1,200 bucks into it. And guess what? 3 days later, Airbnb ended up tanking because of earnings and we got out $2,250. So made about $1,000 in 3 days. Now, it's not like I can promise that to anyone. I can't guarantee that. Nobody can, right? But whenever I see an opportunity like this, I make sure to post it and I make sure to actually take advantage of it, okay? That's how you get consistent. You have confidence, you take action, but don't get overconfident. It takes time. This game literally took me like 8 years. This did not happen overnight. I did not just make $2 million yesterday, okay? I didn't even make $500,000 yesterday, right? It's a slow process. My 1 month is also slow, okay? There's a lot of volatility. Now I'm up only $87,000. Not long ago, I was up like $100,000, but look, the market's volatile. I'm up 87 grand, 4.5%. I'm happy with that. If I can consistently get 3 to 4% and I can compound that over like a decade, it's going to be 10 mil. Okay, eventually it's going to be 10 mil. It's going to take some time. And I think that anyone can do that. Literally anyone. If you have 2 grand and you work hard and you actually have consistent income, you focus on those consistent income strategies that I teach on this channel, my small account playlist, in my Discord, it doesn't matter. If you focus on consistency, you get comfortable, and then you add your W-2 income, your wage income, your salary. Maybe you're a business owner. If you add money into that portfolio and you put fuel on the fire, that's how you scale up. That's how you become a 7-figure portfolio guy. That's how you become a multi-millionaire. That's how you retire. That's how you achieve financial freedom. Now, if you want to get more consistent, I highly recommend that you check out this video right here. It's going to teach you some secrets on how to become more consistent and make more money in your trading.